Welcome to TradeTheMBI.com. This is John's reports for the 9th of January. Well, it was more seesaw battle, pretty much just fighting back and forth around the support levels here. Again, now we're seeing another MBI white spike, so that's going to put some more negative pressure on the market. MBI yellow still leading magenta at this particular stage intraday. It's pretty darn close. That would be what's going to be the power to hold up the market, at least at these levels. Otherwise, you're looking at a move to the 23% pretty quick. Not getting any help from your rising orange here in this particular case, and you already had the extreme from short-term buyers. Now they've faded off a bit, so they could reset within that, but at this particular stage, not quite enough. And you can see that shakeout continues to point to that negativity in the broader specter, and yeah, that's the broad stroke of it. And we get the answers as to why. I mean, we can see that the Fed now has come out clearly against Trump and said that they believe that the policies that haven't even been enacted are inflationary. So they're already positioning for that move. And well, that's going to be an interesting one, particularly when we start to get the actual real data coming from, you know, the bureaus and different organizations that can no longer fudge the numbers anymore. And it could be quite an unpleasant view. Now, does that mean there should be stimulus? Of course not. It's not needed at this particular stage. Obviously, you lower energy costs and you cut some of the wasteful spending, you could improve things dramatically. From an NQ viewpoint, even worse with the MBI white lead. Shakeout even beginning its negative roll. And look for the extreme histogram. Any dip that goes past the green level into the red is going to indicate that they're broader distribution. And literally on this one, we're going to be looking for that shakeout to maintain the histogram moving lower. As long as it continues to go lower and then breaks this previous, let's mark out what that level is just so we can see it. 12.39 negative. Needs to eclipse that. It's at negative 9.3 now. That would indicate a continuation of the downturn. Otherwise, an improvement there, you would have higher shakeout reading and potentially same price level. So that would be a divergence, and that we would look for a positive move. So this is the kind of things you look at. And this is an indication of the bond market also suggesting that rates are not going to be helpful. And I think there's going to be a draw away from the market as well, because you can begin to get reasonable rates given what the reported inflationary rate is. People might see that as attractive, though we can see that from a global standpoint, nobody wants to buy U.S. Treasuries. It's just not interesting. And why would you? I mean, with the deficits that are running and the way they're spending money, and you know that now with California and the fires, they're going to be asking for billions of free dollars to cover their deficits. It's a pattern that California's been doing the last 20 years. They all make it seem horrific, and it's horrible tragedy for the individuals, but almost all of it preventable. They've chosen not to employ those practices that would allow it, but that's a whole different story. From an oil standpoint, a little bit of a give back within that, but needless to say, and we're in the 70s here. That's inflationary. There's just no question about it. Will it stop once Trump's in? And like I said, this is one of those misnomers that people have had with the optimism. They think that everything's going to change overnight. It's not going to change overnight. Yes, some policy directives will change overnight, but they're going to take time to work them through. The damage is quite severe, and it's going to take a while to get through it. And of course, Biden doing everything he can to stop it by, banning offshore drilling across the nation off the shelf. So, and the legal battles for that, it take time. Europe, of course, in a disaster zone. So that's the only reprieve the U.S. gets from that standpoint, at least related to the euro. It's going to continue to struggle within that. But if any missteps, of course, the euro will bounce on them, because a lot of people see it as oversold, but it's not, because the eurozone has been in recession for quite some time, and it just hasn't been fully reflected by the euro exchange. It does hurt S&P companies in that overall because a lot of them do business overseas and they lose the advantage of that. Now we get our slow creep of gold, and of course we expected this. We expected it to be sooner, and certainly should have a bit more momentum to it. Still quite a bit of attempted blockage here with the shorts, but too many people wanting to be in an alternative class at this particular stage, and that makes it problematic for it. Bitcoin, after its big bump, filling it all back in. Not very problematic. It's just typical within its normal range. Hasn't turned around yet, so may not be done. It's filled most of the positive extremes. Same with ETH, pretty much identical. It's creating a nice little stabilized base here, right along its 50%. Pretty clean and easy from a 50K standpoint. You can see how murky everything, but really unable to do anything until late in the day above the 23%. And even now, it's still been pretty rough for it to do anything productive with that. So that gives you your broader reading of it. When we look at it from an intraday standpoint, what a mess that is. Just boom, boom, boom. And this is just call buyers and put buyers fighting it back and forth. Nobody has a clear idea of what to expect. They hear a lot of the rhetoric, everything from Greenland, Panama Canal, Canada, 51st state. Who knows what else? And again, I told you, don't get caught up in the hyperbole. That's just a bunch of baloney. It's all part of the show. While other things get done that aren't being noticed, people can talk about these things, and that way you don't draw attention to the real thing you're doing. If anything, Trump understands the show and how you play the game, and throwing out something creative, you get all these people fanning the flames of it, all the while you're working on other ideas and policies in between. So European session here, turning around, coming to the upside, may even get positive here in a moment. So that's where things are at the moment. As always, though, anything relevant, I'll put it on the Skype chat for you. Have a good one. Trade well.